Thanks for the introduction, Kamal, and good evening, everyone. Let's get started. So, part one covered offshore markets, and the CIO of our investment committee chatted about where we feel there is opportunity in this volatile but profitable market cycle. Now, ultimately, there is no doubt that clients should have exposure to the best companies and markets in the world. And the reality of that is that it often exists outside of South Africa. Part two will now cover the practical aspect of actually purchasing Forex to transfer to your offshore custody accounts. I will be taking you through the first part, which will cover foreign investment allowances and single discretionary allowances, as well as the respective rules around this. And Viren will delve into the timing of Forex purchases and the strategies for that. So let's get into it. The legal and tax requirements differ based on the amount of Forex that a taxpayer intends to purchase, and so it's logical to divide it into three levels by monetary value. The distinction is necessary because the requirements differ for each level, although as you will see, there are many commonalities in the greater than 1 million Rand but less than 10 million Rand application and the greater than 10 million Rand application. Foreign investment allowance applications can only be done by individuals, and this webinar will focus on Forex authorization processes for individuals. The single discretionary allowance, or SDA, is the least onerous and easiest to navigate. Let's outline some of the details. So firstly and notably, SARS approval is not required. In terms of frequency and use, an SDA is an annual allowance that is automatically available, meaning you don't have to specifically apply for it. It applies per calendar year, so from the 1st of January to the 31st of December every year. And because there isn't an application, you could essentially transfer 1 million Rand in December of a year and then another million Rand in January of the next year. What's important to note, however, is that this 1 million Rand annual allowance covers overseas travel, international purchases, gifts, etc. So if you have used some of this allowance for these other purposes, you will need to subtract these amounts from the 1 million Rand, and then what is left will be what you are able to use as your investment allowance. The authorized dealer, in other words the bank, will fill out a balance of payments declaration that you will then sign confirming this transfer, together with the fact that your total foreign spend did not exceed 1 million Rand for that calendar year. Now let's move on to the greater than 1 million Rand Forex investment allowances. So I've grouped the greater than 1 million Rand but less than 10 million Rand application and the greater than 10 million Rand application in one slide because there are many commonalities between the two. So notably different in this application is the fact that there is a formal application via SARS. The FIA 001 application is done online via the client's e-filing profile and will require supporting information and documentation, which will be elaborated on in a bit. When submitting the FIA 001 application, SARS requires confirmation that you are up to date with your tax filings and payments, and as a result, they will require a TCS PIN. This stands for a tax compliance status PIN, and it proves that you're compliant with South African tax regulations and eligible to apply for the foreign investment allowance. Now, contrary to the automatic annual SDA allowance of 1 million Rand per calendar year, once your FIA application is approved by SARS, it is generally valid for a period of 1 year from the date of approval. This means that you can transfer funds within the approved foreign investment allowance limit within that time frame. Compulsory supporting documentation required in these applications to SARS as a minimum are 3 years assets and liabilities at market value as opposed to cost, 3 months bank statements, and proof of source of funds. Now, there aren't really restrictions on what can fund your foreign investment, but there are different requirements depending on the funding source. So whether your proceeds arise from, say, inheritance, dividends, sale of property, or even a distribution from a trust, the supporting documents required by SARS will differ. In our experience, the majority of cases involve proceeds arising from either bank accounts or existing investments. In the case of bank accounts, as a minimum, SARS will require your funds to be freely accessible immediately. So, for example, if you will be using a fixed deposit to fund your offshore investment, the fixed deposit would need to have matured at the date of your application. Another requirement would be proof that the funds are freely accessible, and you would need to provide this via a bank statement that is less than 2 weeks old, showing that the proceeds are in an immediately accessible account. In the case of existing investments used to fund your FIA, as a minimum, SARS will require similar information. So firstly, that the funds are freely accessible immediately, so not in a financial product with a fixed term or a future maturity date. They will also need a 3 months statement of the investment, reflecting the applicant's name, number of shares or units, and the current market value. And lastly, SARS will require a projected capital gains tax calculation for the CGT that will arise when the investment is liquidated to fund the foreign investment. In terms of destination information, SARS requires the type of investment product that will be receiving the proceeds, as well as which institution holds or manages this product. In addition, they will also need to know when the product will be incepted or when the account will be opened to receive the proceeds being sent offshore. Another compulsory field is the country funds are being sent to. Now, this differs from the currency that you are purchasing. So, for example, if you were investing in a product held or domiciled in, say, the Isle of Man, even if you were purchasing US dollars, the country would be Isle of Man and not USA. The duration is the intended time horizon of the investment. And in most of our cases, because international portfolios are viewed largely as legacy assets for future generations, the response to this question would be long-term and greater than 10 years. Now, SARS may also conduct an audit when an individual submits an FIA application. In our experience, they may choose to audit your application regardless of whether there are any apparent red flags, but rather the likelihood of this is higher in applications exceeding 10 million Rand. For applications in excess of 10 million Rand, it is compulsory to apply for a special dispensation from the South African Reserve Bank, or the SARB, and this would generally require additional justification and approval, and this process would be facilitated by a bank. Now, having understood how the allowances work and what is needed to activate these allowances, let's move on to the timing of Forex purchases. For this section, I hand over to Virian.
Thank you, Seri. We are often faced with this question, is it the right time to buy Forex? Or we see extreme demand for Forex in a panic or bad news situation where the Rand has weakened swiftly and significantly. Our view is that there's never an exactly ideal time to buy Forex, but certainly there is a time not to buy Forex that we are very sure of. Let me illustrate this via a graph that PWM uses to guide Forex purchases. For the sake of simplicity and relevance, we will use the US dollar Rand rate. This graph is a 24 years of history regarding the Rand US dollar exchange rate. I've also interposed important events that affect the exchange rate, whether it's strengthening or weakening. A further aspect to keep an eye on is the dotted line, which represents the theoretical exchange rate based on the economic principle of inflation rate differentials. Let me explain further. This principle states that the Rand should depreciate against the US dollar by at least the difference in the long-term inflation rates. So for example, if South African long-term inflation is 6% and US long-term inflation is 2%, then the rand should be expected to depreciate against the US dollar by 4% per annum over the long term. That is 6% minus 2%. The dotted line represents the theoretical exchange rate based on this principle only. It does not take into account extraordinary economic events or sovereign risk. Around this dotted line, you will notice that there are periods of rand strength and times of rand weakness. So starting from the left, in the early 2000s, we experienced a thing called the dot-com bubble. You might remember this. It was the extreme fall in the markets due to the tech stocks at that point in time bursting, the dot-com bubble. Following the dot-com bubble, we had a period of great Chinese growth story from 2003 to 2007, where commodity prices were very strong due to Chinese growth story and Chinese demand, and which the South Africa benefited immensely in their stock markets as well as the exchange rate. As you can see, a long period of strength there, which preceded the global financial crisis. That's when banks wobbled all over the world, created a crisis. And as you know, whenever there is a crisis, monies leave emerging markets and return back to safe haven currencies like the US dollar. So you'd normally see these spikes in these times. Following the global financial crisis, there was an aggressive interest rate cutting cycle by United States. And therefore, you see a period of rand strength as that United States dollar basically, the Fed cut the interest rates down to zero at that point in time, which supported currencies like ourselves, which had good interest rates, meaning that there was a great profit to be made by being in rands and earning good yields rather than being in the dollar and earning zero yields. Following that period, there was a further support when Europe also started doing quantitative easing, reducing interest rates, introducing liquidity into the European system, and which led up to December 2015 when we had our next spike in the rand, which was the Nene Gates cycle. You might recall that the then President Jacob Zuma tried to replace, or actually replaced, Mr. Nene, the finance minister at that point in time, with his own lackey, Mr. Des van Rooyen. And in that 4 days that Des van Rooyen, or whatever it was, became the finance minister, rand shot out. So it was a great shock amongst investors and worldwide markets about such a brazen move to replace the finance minister. Subsequent to that, in 2016, we had Brexit. And so in such an event where, a huge part of the European Union is now leaving the European bloc, you had a prolonged period of weakness. And then the rand sort of strengthened back to the dotted line in a period of, there has been trade tensions, but, a fairly normalized period. Then that led into the COVID-19 pandemic, which again created huge panic and losses across markets across the world, and the rand spiked out at that point in time, and then subsequently strengthened towards the dotted line again. And then we had a period of weakness, which is turning around now, but this period of weakness was to do with the US dollar interest rate hiking cycle due to the inflationary pressures created by the war on Ukraine, then further Middle East tensions and so on, created an inflationary environment amongst geopolitical tensions with China and so on, which is not good for an emerging market currency like the rand, because the dollar will remain strong. But you can see now that it's coming back towards the dotted line because we have entered a US dollar cutting cycle. Now, one must remember that the rand is a very liquid currency. In a very sophisticated financial system, in South Africa. Although we're seen as a third world country, our financial system is one of the most sophisticated in the world. So quite often, speculators overseas use the rand as a proxy for other emerging market currencies, which contributes to its wild swings from undervalued to overvalued, as it's easily tradable, you see. And so we'll never get out of that. So these wild swings must not be overestimated or underestimated. Now, in this graph here, let me explain the dots, green and red dots. It simply represents our Forex purchasing behavior over the last 24 years. The most prudent approach that we have used for clients is to buy regularly when there's fair value, avoid panic buying in extreme weaknesses, and double up in periods of extreme strength. In other words, create a Forex purchasing program. Remove the sentiment. We've never bought in the red dot periods, as this was clearly panic and when the rand was extremely undervalued. The standard green dots represents regular buying in periods where the exchange rate was somewhat in the region of the dotted line, and the dark green dots represent doubling up on Forex in times of unusual rand strength. This type of approach introduces sanity and clarity to a Forex build-up strategy. It removes sentiment, as I mentioned. We have noticed that in good times, when SA is doing well and the rand is strong, we tend to forget about our Forex purchases. And when the rand is extremely weak due to load shedding, grey listing, and all the other problems, clients are generally more sensitive to this and are demanding offshore exposure at those times, which is exactly the wrong time. So the idea is that we can help with this. PWM certainly has a very, very successful Forex purchasing strategy and program by attaching your investment profile to our Forex buying program so that you never lose out on accumulating your Forex reserves, but at the right times. Now, we need to make this a tangible program. You need to activate your Forex purchase and offshore investment program. To make this a reality, there are a few steps. You need to review your asset base in total. Determine what your targeted offshore investment base should be by looking at what you currently have and what you think the ideal amount is in terms of how it relates to your total asset base. So you have to establish a percentage. Using that offshore investment base target, create your annual targets to build up to that target. Once you create your annual targets, you are now adding some practical, regular Forex purchase opportunities over that period of time to achieve your target. And then you use the practical approach of ensuring that you don't buy in periods of extreme rand weakness, which is the red dots, that you buy regularly in times of the standard green dots in terms of where the rand is at a reasonable rate. But you also then double up in periods where you find that there's extreme rand strength or unusual rand strength over a period of a year or two. In those particular cycles, you need to then step on the accelerator a bit. Using this approach or setting this approach in place, you will need to discuss with your bankers and your wealth managers so that it's not just theoretical, it becomes a practical thing in your portfolio to ensure that this program is rolled out in a structured, formalized, and a non-sentimental way. So I wish you luck in your developing your offshore portfolios. Don't hesitate to contact us if you need help, and good luck and good evening. Thank you.